Merry Christmas, dividend investors. Mikey Roux here for Dividend Stocks Rock on this YouTube channel. I hope that you had a great Christmas. And today for Canadians, it is Boxing Day. Funny enough, in 2018, the best day to start invest in the market was actually on December 26th. That was following a 6-month quick bear market. The market went down about 22%, and the very first day that you should have started investing was on Boxing Day. So today we're going to talk about what's going to come up in 2025. I pulled out my crystal balls, and we are going to talk about the main investment themes for the next year. The first one, obviously, Trump and tariffs. That has been going on the news since he won the election. Trump loves tariff more than anything in the world. He puts that on his toast instead of having peanut butters. He just wants to impose tariff everywhere. And then investors starts to panic. They're just thinking, oh my God, what's going to happen? Are we going to have plenty of companies in Canada and China seeing their sales going down by 25% or something like that? I don't think so. Keep in mind that the last time that Trump was into office, and I'm not here to do politics, but I'm just here to state the fact, if you look at how the US market and how the Canadian market reacted between 2016 and 2020, well, it was quite positive. The S&P 500 was actually up by 80%, and the TSX was up roughly by almost 30%. So long story short, what I would tell you here is don't panic just yet. There's a lot of noise involved in this thing, and we don't know which kind of tariff is going to happen, how it's going to affect industries, and if it's just going to be a big lever for negotiation instead. And long story short, the only important thing here to remember is companies will adapt. So if you don't want to get involved into the tariff wars, well, you will have to sell probably much half of your portfolio, because a lot of companies are actually importing or exporting goods from another country. So you will have to get rid of your Apple, for example, that are building a lot of their smartphones in Asia. And then when they come back to the US, well, technically they will be facing tariffs, right? So you have to be careful about why and how you modify your portfolio just on coming up trends. Another one that will be super important, especially in Canada, is lower interest rate and the possibility that we eventually hit a recession. So Bank of Canada in December just announced another 50 basis point interest rate cut, bringing the overnight rate from 5% in June of 24 all the way down to 3.25 today. Even better, if you are about to renew your mortgage, we think that we're going to have a few more, probably 25 basis point cut in 25. The reason why we have so many cuts like this is not necessarily something positive. In fact, it's quite the opposite. It's because the economy is not doing that well, and Bank of Canada is well aware that it is facing immediate threats and also long-term threats. So immediate ones, well, kind of obvious, but the Canadian economy is not growing that fast. The housing starts are pretty much slow, and then we have a higher unemployment rate. So long story short, people don't get jobs that easy anymore. The construction is slowing down, the economy is slowing down, and then Bank of Canada is thinking, well, if we want to succeed in this smooth landing, we need to drop rates super fast. The future threat, well, of course, we have tariffs because we don't know how it's going to impact the economy, but certainly it's not going to be a good thing, right? And the other thing is also the change in the immigration policy. So less immigrants mean less people come into the country, less people meaning they don't work here, they don't consume stuff here, they don't buy anything, and they don't help economy. So we are in a situation where maybe we're going to finally get that recession in Canada. Not saying it's going to happen. It's been 2 years that I think it's going to happen, and it's not happening. So take this prediction with a grain of salt. But anyways, this is what I'm thinking right now. Another big theme is, of course, artificial intelligence, AI. But I would combine this AI with energy. Last year, I've discussed the rise of artificial intelligence in my roundup for the next year, for 2024. But this year, the difference is we have seen companies, especially big tech, looking to ink deals and get more power from renewable sources. So notably, Microsoft inked a $10 billion deal to get more power from Brookfield Renewable, and also has also made an agreement to restart 3 Mile Island, a nuclear power plant in Pennsylvania. When you think of AI, you want to surf that wave, but just think one more second before you jump into the AI trend and buy an AI ETF, because all companies are going to use it. As you can see on this graph, everybody thinks that AI is going to improve one way or another their business. So all kind of businesses, like even classic retailers like Walmart, will use AI to manage inventories and transportation, for example. So yes, you will benefit from that. It will be used to lower costs, to improve profitability and efficiency. So you don't necessarily need to find that obscure little tech stock that is going to explode. In fact, if you are looking for interesting companies, I would suggest that you start with a great set of metrics. Right now, we're trading at near a all-time high once again. So the important thing, if you want to stay invested, is you want to stay invested in quality stocks. This is what I offer you with the Rockstar list that you can download for free at dividendstocksrock.com/rockstar. The Rockstar list is taken from our Dividend Stocks Rock stock screener, and we apply a few filter on it. So a few filter, making sure that you have companies that for the past 5 years have shown positive revenue growth, positive earnings growth, and of course, positive dividend growth. As you can tell, this is the 3 pillars of my dividend triangle. So when you find a company that increase their sales and then make more profit and then share the wealth with shareholders by increasing the dividend, well, chances are it is a thriving business. It is a very solid business. It will have a robust balance sheet. And if there's a recession coming up, they will be able to go through it without getting hurt too much. Finally, I want to leave you with an interesting thought about the market. I started investing in 2003, so it's been more than 21 years now that I am fully invested. I've always invested all my money in stocks and never waited on the sideline. You know why? Because when I look at this graph, the only thing I can see is that over the long run, the stock market goes up. Yes, you're going to have moment that you're going to have a stock that goes down, but in the end, if you stay invested, if you buy quality companies, you will not have to worry about what's going to come after next, and if we're going to have a recession in 2025, if tariff is going to destroy your portfolio, or if any other events is going to change the world. Events happens all the time. We have great reasons to not stay invested all the time, but you know what? Companies adapt and the stock market goes up. So I wish that you will have an amazing year for 2025, filled with hope, passion, health, and wealth. Because, I mean, if you're healthy and you're not wealthy, well, there's no point of spending money, right? All right, guys, enjoy the holidays. We're going to come back with a quick series at the beginning of the year to start fresh. And until the next video, don't forget to stay invested.